Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine rights issues of shares in earnings per share calculation, IAS 33. If you are coming across my lecture for the first time, please like the video, also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. This is my third video on IAS 33, earnings per share. So, right issues is an issue of shares for cash to the existing shareholders at the price below the market value. I want you to know that right issues are usually made to the existing shareholders proportionately. But this one, unlike the bonus issues, which does not involve cash, this one cash is involved. The price at which that right issue will be made will be lower than the market value of the shares of the company. So that's why I say right issues is an issue of shares for cash to the existing shareholders at the price below the market value or below the market price. So we want to examine the terminologies used in right issue, definition of terms. Definition of terms. Number one, cum rights price. Cum rights price. This is the market price of the shares just before the right issue. The market price or the market value of the shares before the right issue. That is cum right price. Cum right price is the market price of the shares before the right issue. Number two, right issue price. This is the price at which the right issues were made. The price or the price at which the right issues were made. Number three, we have theoretical S-right price. Theoretical X-right price. Theoretical S-right price. This is the price that the shares ought to be in theory after the right issue. The price at which the shares ought to be in theory after the right issues. I repeat, what the share price should be in theory after the right issue is said to be the theoretical S-right price. Theoretical S-right price is the weighted average price of the share before the right issue and the new shares in the right issue. The weighted average price of the shares before the right issue and the right price and the right issue price. That is the theoretical S-right price. To calculate the theoretical S-right price, we have the cum right price. Cum right price. So you have price. As we have price. This is the value of the cum right price. This is the number of shares. Number of shares. Let me take this number of shares to be A for cum right. This is the market price before the right issue. Weighted price now. Weighted price. The weighted price will be the number of shares before the right issue times cum right price. So A times B, that will be AB. Then we now consider right issue. Right issue. The number of shares in the right issue, let's take that to be C. And the right issue price, let's take it to be D. You know the A is number of shares before the right issue. number of shares before right issue. That is A. While B is the market price before the right issue. The product of A and B, A times B will give you this. This is the number of shares that were made in right issue. And this is the price at which the right issue were made. Therefore, you have C times D, that will be CD. So you now sum up this, AB plus CD, then the number of shares also, A plus C. So to calculate the theoretical S right price, you have what you have as the total here, AB plus CD over A plus C. So this will give you the theoretical S right price. What are the steps for solving any partials involving right issues? Steps for calculating earning per share, EPS, where right issue are involved. Where right issues are involved, you follow the following steps. Number one, calculate the theoretical S right price. Calculate the theoretical S right price. Step number two, calculate the bonus fraction. Calculate the bonus fraction. Bonus fraction. The bonus fraction equal to cum right price. Cum right price. Remember, the cum right price is the market price before the right issue. You take the market price before the right issue divided by the theoretical S right price calculated in step one. That will give you the bonus. Calculate the bonus fraction. That will give you the bonus fraction. Then step three, calculate the weighted average. Calculate the weighted average number of shares. Number of shares EU to using EPS calculation. So this is not different from what we have for bonus issue. Remember, the starting point is to have a date, the date or period. Then you have number of shares issued, number of shares issued. Then the next column will be cumulative number of shares. The next column will be time factor to incorporate. Then after time factor, you have bonus fraction, just like that of bonus issue, bonus fraction. Then you have weighted average number of shares. So that is the step or steps to follow. Then after the weighted number of shares, you can now calculate the basic EPS. Step number 4, calculate the basic earning per share. After the basic earning per share, you can now calculate the comparative earning per share. Calculate the comparative EPS. Comparative EPS is calculated for the previous year. So you have the previous year basic EPS times the reciprocal of the bonus fraction. So that means the reciprocal will now be theoretical S-right price over cum right price. So these are the steps to follow when calculating the EPS where right issues are involved. Example, company F had 3 million ordinary shares in EU on 1st of January year 7. On April year 7, it made a 1-for-2 right issue of 1.5 million ordinary shares at 20 naira per share. 1-for-2 means 1/2 of 3 million. That will give you 1.5 million. That's how they got this. The market price of the shares prior to the right issue was 50 naira. This market price prior to the right issue, I've told you that is called cum right price. An issue of 400,000 shares at full market price was then made on August year 7. On August 1st, on 1st August year 7. In the year to 31st December year 7, total earnings were 17,468,750. In year 6, EPS had been reported as 3.50 naira required. Calculate the earning per share for the year to December year 7 and the adjusted EPS for year 6 for comparative purposes. This question is obtained from ICAN study test, financial reporting, and strategic business reporting. Now let's have the solution to the question. I've told you whenever question involving EPS is given or whenever EPS is required and the questions involve the right issue, I've told you that the starting point is to calculate the theoretical S-right price. Now, working 1. Calculation of theoretical S-right price. I've told you to calculate the theoretical S-right price. You have cum right. Cum right. Now, we were told it made a 1-for-2. That means the existing share was 2. Then right issue. Existing share was 2 and you'll be given 1 additional shares as right issue. 1-for-2. Cum right 2. The 4-2. The latter one is the cum. So the additional one that will be given to them is the right issue they are talking about. How much is the cum right price? I've told you the market price prior to the right issue. I've told you that is cum right price. You were told the market price of the share prior to the right issue was 50 naira. So the cum right price is 50 naira. So 2 times 50, that will give us 100 naira. 100 is the product of 2 and 50. Then how much was the right issue price? So right issue of 1.5 million ordinary shares at 20 naira per share. So the right issue price is 20 naira. So 1 times 20, that will still be 20 naira. If you sum up this, we have 120 naira. And how many shares do we have altogether? 2 plus 1, 3. Therefore, theoretical S right price, which is cum right price, which is 120 over 3. So we have 40 naira. That is the theoretical S right price. Then the bonus fraction. Bonus fraction. I've told you that the bonus fraction will be cum right price. That is the market price before the right issue, which is given to be 50 naira. Cum right price of 50 naira over theoretical strike price, which is 40 naira. That is the bonus fraction. Now that this has been obtained, the next step is to calculate. Let me take this to be working 2. Working 3 now. You want to calculate the weighted average number of shares. Weighted average number of shares in EU. I've told you you could have date or period, then number of shares EU. Then we have cumulative number of shares. Cumulative number of shares. Now, you were told the year involved is year 7. We have year 7. Company F had 3 million ordinary shares in EU on 1st of January year 7. So January 1, the shares in the company had, we have that as balance brought forward, which is 3 million shares. On April year 7, it made a 1-for-2 right issue of 1.5 million. April 1st. We want to make a right issue of 1.5 million, 1-for-2. 1/2 of 3 million, that is 1.5 million. Cumulative will be 3 million plus 1.5 million, that is 4.5 million shares. That is the cumulative number of shares. That is April 1st. Now, the market price of the share prior to the right issue was 15 naira, that is right price. An issue of 400,000 shares at full market price was then made on 1st August year 7. So we have August 1. So issue of 400,000 shares. 400,000. So the cumulative shares now, 4.5 plus 400, that is 4.9 million shares. 4.9 million shares. Now, in the year to December year 7, the total earnings were this. This is the earning. In year 6, you are given the EPS. So these are the shares in EU. Then the next thing is time factor. Our time factor. These shares was in existence from January to March ending before another one was issued in April. Let me have to March 31st. How many months is that? January, February, March. 3 months. 3/12. Then another one was issued in April. That will be in existence in April to April, May, June, July, before another one was issued to July 31st. April, May, June, July. That is 4 months times 4/12. Then this one that was issued in August, the year end of this entity is December. That is the year end. It means this one will be in existence from December to the end of the year. From August 1st to the end of the year. August to December 31st. August, September, October, November, December. August, September, October, November, December. That is 5 months times 5/12. Then the next item is bonus fraction or bonus factor. Bonus fraction or bonus factor. Our bonus is 50/40 as calculated. This is the right EU. This is the right EU. I've told you that the bonus will be applied to the number of shares held or number of shares in existence before the right issue. And this is the only shares the entity had before the right issue were made. So we multiply this one by the bonus fraction, which is 50 over 40. Then this one will not be affected. This will not be affected. The shares the entity had before the right issues, that is what will be used to multiply. Then that is what we will multiply our bonus fraction with. So weighted number of shares now. So 3 million times 3 divided by 12 times 50 divided by 40. That gives us 937,500. 937,500. Then this is 4.5 times 4 over 12. 4.5 million times 4 divided by 12. That gives us 1.5 million shares. 1.5 million shares. Then this one, 4.9 million times 5 over 12. That gives us 2,041,067. 2,041,667. So if you now sum up the shares, 2,041,667 plus 1.5 million plus 937,500. So we have 4,479,167. This is the weighted number of shares in issue. It is this weighted number of shares that will be used in calculating the earning per share. The EPS now, we have the earnings for year 7, which is 17 million. 468,750 divided by the weighted number of shares in issue, which is 4,479,167. So if you divide that, 17,468,750 divided by 4,479,167. So we have 3.90 per share. So this is the earning per share of the company F. Then the comparative EPS now. Comparative. EPS, that is for year 6. So the EPS for year 6, which is 3.50 kobo, 3.5. You now multiply it by the reciprocal of the bonus fraction, which is, the bonus fraction is 50 over 40. The reciprocal becomes 40 over 50. The numerator goes to the denominator, while the denominator goes to the numerator. So we have 40 over 50 as the reciprocal. So 3 times 3.5 times 40 divided by 50. So we have 2 naira 80 kobo. That is the comparative EPS. This marked the end of the solution to the question. In my next video, I will examine the diluted earning per share. Please drop the love emoji, like the video, and also share it with others. Thanks for watching ZICA.